Welcome to Channel AMEC, your insight to the Australian visa system. Good day everyone, my name is Carl Young, your online YouTube visa consultant. Are you interested about migrate to Australia? Why don't you consider to subscribe to my channel and turn on the little bell on the side, so once we have all the updates and news, you'll be the first one getting all the insight. Now it's the is it the third week of July 2022? Perhaps, yes. We've been waiting for a couple of weeks for the announcement of the new policy for the new financial year of 2022-23, but we still haven't got anything. But there is some sign coming up, and it will build up, perhaps. And also, I'm really positive about these news. It's not direct visa news, but indirectly, it's gonna affect you and me, and also affect the economy of Australia. So let me bring you to this. There's actually two things that I wanted to chat about today in this video. One is the change coming up for New Zealand's investment visa. Now what's gonna do with Australia? Well, it is because what they're gonna change ultimately is gonna affect a lot of overseas investors, whether they're gonna choose New Zealand or perhaps coming to Australia. And also the second news is about the Foreign Investment Review Board. Now what does it gonna do with the visas anyway? Well, it is because if you want to go to Australia, you want to rent or purchase properties, that is gonna directly affect you. Anyway, let's jump in there. First, have a look what Scott Morrison. Alright, we miss him. He has been the Prime Minister of Australia until the 20th of May 2022. Now, just right before that, on the 17th of May 2022, Scott Morrison tells A Current Affair, which is the TV programs well known in Australia, that JobKeeper saved the country. Well, it did. And now, what is JobKeeper? If you don't know about JobKeeper, JobKeeper was the program that Scott Morrison, as Prime Minister back then in 2020, announced. What for? Obviously, pandemic, because COVID-19 came and the whole country and whole nation of Australia, and that including New Zealand, they closed their border for public health safety issues. Now, because the border has been closed, a lot of business is generally shut down and closed down. So JobKeeper was the program utilized back then by the government of Australia to what? To distribute money and cash. If you recall back then, and not just Australia but also US and numbers of countries in Western countries has the plan to distribute money and cash to citizens in order to spend and continue to live with their life rather than going around and get contracted by COVID, right? So it was a good plan, and I think there's a similar plan had been done in New Zealand as well. So what happened then? Well, it was good. It saved the country, but let's have a look. The government will fine, if they were re-elected, look at this, 3.3 billion public service cut. Now that's a lot of money. And that's probably why they already cut the spending for Department of Immigration. Remember, the current government is talking badly in regards to how they cut the spending for the Department of Home Affairs and caused all the backlog. And they were gonna further cut more, 3.3 billion. For the Department of Immigration was 857 million from my memory, and this is gonna be more. What does that mean? Now that means the JobKeeper program, yes, it did save the country, but the government has overspent. Now there's gonna be more news coming up on this one. Now same thing happening in New Zealand. Now what are these things gonna do with this video today? Well, obviously it's all about spending. Look, if you have followed my channel long enough, the Treasurer Jin Chama is looking in way to save more and to increase the government earning more by using tax or whatever it is in order to save the nation's economy. Well, same thing happened in New Zealand as well. So what they gonna do? Well, on Wednesday, 20th of July, look at this. They have, this is actually the government's website. So official website of New Zealand government, and it's Beehive. Wow. Okay, beehive.gov.nz. Well, they announced this. So the Honourable Michael Wood, who is the Minister of Immigration for New Zealand, basically announced a change of their investors or investment visas, and replaced with what they call a new active investor plus visa. So what does that mean? That basically meant, well, previously, because New Zealand dollars and Australian dollar is pretty similar, so the eligibility is minimum of $5 million. Wow, minimum. I mean, minimum. Now, if we look at Australia's investment visas, it starts from 1AAA up to the top is 1AAC, which is $5 million. Now, that's the top one for Australia. Now, the minimum one for New Zealand is $5 million. They start with $5 million. Wow, and it's going to be active. What does it mean? So that's going to be minimum go into an innovative business. It cannot go into those passive stock or bond investment anymore. They don't allow that anymore. So what would that happen to us? And if we look down here, the more detail, they're talking about $5 million minimum investment and receive highest ranking, and the lower minimum ranking is that you need to invest indirect at least 15 million. Oh my gosh, are you prepared to do that with 15 million? I'm not too sure how this will work, but I do know, because I'm pretty experienced, I say, for the Australian visa system, that, well, if you're a foreign investor, you're looking to migrate, would you pick 5 million to go to New Zealand, or perhaps choose Australia? So that's, again, it's a way, the policy that New Zealand government had made, and I presume that more people is likely to choose Australia rather than New Zealand if they put them two side by side to compare. So it's a disadvantage, I think, for New Zealand, but it's an advantage for Australia. Now, why New Zealand would do that? Well, same thing. They want more money to actually go into their the government want more money to actually make it more profitable, and also help the economy to grow again. Now, for Australia, it will be beneficial, because rather than choosing New Zealand's investor program, you probably come to Australia, you spend less, and you get the visa, you migrate as well. So that's gonna push a lot of interest into Australia. Now, secondly, obviously, is we're talking about the FIRB, the Foreign Investment Review Board. Now, what is that? Now, you probably wanted to consult with your accountant about this, because if you wanted to buy any asset or properties in Australia, for example, easily house or apartment or unit, and you do not hold a permanent resident or Australian citizenships, you're required to pay this FIRB fees. Now, what happened yesterday? Let's have a look. Okay, this is the Honourable Dr. Jim Chalmers. We know about him. He's the current Treasurer of Australia. So, what did he say yesterday? Increase foreign investment fees and penalties. Now, what does that mean to us? So, starting from next Friday, 29th of July, your foreign investment application fee will double. And why would they need that to be double? Because they can generate additional 455 million in budget revenue over the forward estimates. Why do they need that? Because Scott Morrison has, well, they call them, the current government called the former government, overspent all the money looking into back into the immigration department. Got the 875 million cut. They need that money back, so they're looking into people who looking to invest in the property. So let's look at what this will actually affect. So I've actually found the current fee payable for the Foreign Investment Review Board, and let's scroll down to the in the middle, I think. Here we go. This is a table. This is the table showing us how much you are required to pay the Foreign Investment Review Board if you want to purchase property, so residential. We're looking at residential land. So for example, if you want to buy anything less than 75,000, well, you probably cannot get anything less than 75,000. So let's move on to less than $1 million. Now currently, if you pay before 29th of July, before Friday next, you gotta pay $6,600 just for a foreign investment review board as an application. Otherwise, you cannot buy the property. Now, what's going to happen on the 29th of July and onwards, that $6,600 will become $13,200, double of that price. So if you purchase anything less than 2 mil, says $13,200, and from 29th of July, it will be $26,400. So every of this column will double. Okay, so now let's get back to me. How would that actually affect? Now, my prediction and estimation that it's gonna possibly, I think, push up the housing price more, but it's more beneficial for people who have their permanent residency or Australian citizenship, because you can buy second-handed properties and you don't need to pay all this, and stamp duty is low, so it's more beneficial for the locals, but a little bit more disadvantage. Well, not disadvantage, but you actually got to pay more if you're a foreign investors or you do not hold a PR or citizenships, and this will also further push on the cost of the property investors, and that will also directly affect the rental price, because if you spend more, think about this, if you're the investor, you spend more to buy an apartment to invest for. Obviously, if it's gonna be investment apartments, you gotta rent it, so your rental is gonna likely to go higher. So the renters wanted to rent in that apartment will actually pay a little bit more, but that's not gonna come effect immediately, but over the short term, I would say 1 to 3 years, you will see another jump at hype of the housing prices. So it's actually, is it good for us or not? Well, look, if we look at the policies that the Australian government, the current government, is obviously looking to increase the annual intake quotas. So people coming into Australia, obviously they need to live in, right? So if they need to live in, that's the price. If they want to purchase a housing price or house or units, that's the thing they're gonna pay for. So, and if you want to invest an apartment or house for rental purpose to yield, okay, the cost is gonna be higher unless you're local. So I think the policy, I'm pretty welcome. I don't have negative feedback on this one, but I think it's a good thing. It actually increases the earnings, the revenue for the government, and also it's adjusting the locals' purchase power against the foreign purchase power to balance this up. But again, it will slowly grow the valuations up as well. So anyway, that's my evaluation. Obviously, I'm not a finance or real estate expert, but obviously from looking into the immigration and migration figures, that's where I probably would predict will go. Anyway, should you have more question or query, more than welcome to leave a comment right down below, and I see you next video. Goodbye.